Now, the discount chain Poundland has agreed to an improved takeover offer from South African retail group Stenoff. The new offer values Poundland at about £610 million compared with a £597 million offer that had been agreed between the two firms last month. There had been speculation that Stenoff would have to up its offer after U.S. hedge fund Elliott increased its stake in Poundland. Stenoff said that the new revised offer was final. And the International Energy Agency says a weaker economic outlook means demand for oil in 2017 is likely to grow at a slower rate than this year. Now, according to the agency, global demand for oil will grow by 1.2 million barrels per day in 2017, down from 1.4 million barrels per day this year. Now, this represents a cut of 0.1 million barrels per day from the IEA's forecast last month. Meanwhile, increasing supply is keeping pressure on crude prices, which have fallen sharply in the past month. Well, let's bring in now Adim Okwesa, research analyst at Financial Derivatives Company, to talk more about this. Good afternoon, Adim.
Good afternoon, Chineke.
Now, IEA has cut its oil demand forecast for 2017. What is the implication of this for the global oil market?
Well, the IEA, it just means that the rebalancing process will take longer and will be more difficult. IEA said that the markets will rebalance, but it will take a longer process. It's like saying you're going to be a millionaire, but not now, but next year. And what they reduced their forecast because of the uncertainty outlook. If we look at Africa, three of our three largest economies, Nigeria, Angola, and South Africa, are all struggling. In Europe, in developed economies, most central banks have very low negative interest rates because growth rates are not where they are meant to be now. Even the US, which is, although it is quite resilient, it still has some slight hiccups. And of course, in China, it is very uncertain because they're a very closed economy. So it's a very dim economic outlook for 2017. So, of course, that would curtail oil demand.
Now, how do you... Okay.
On the positive side, the IEA said that slowing demand growth would help curb refiners' output, which would reduce the drawdown of stockpiles. And high stockpiles have been dragging on oil prices in recent weeks. So if there's a drawdown in stockpiles, that should offer some support to oil prices.
Okay, so how do you put that in? How do you relate that to OPEC's forecast for 2016? OPEC is quite upbeat on the demand for 2016 and is forecasting that the 2016 oil demand is going to grow.
Yep, I think their forecast is predicated on rising demand in India and China, which has, although demand was growing in those emerging economies, demand is starting to slow. So I disagree with OPEC's forecast. I think demand will struggle to grow until early 2017.
Now, we've seen oil at already, low price. You mentioned the crude stock piles, Saudi Arabia production rising, and now this forecast by IEA. Does this mean we are going to have a prolonged period of low oil price?
Yes, of course. I think oil prices are going to remain low for a very long period of time. I think 100 is long gone. The days of 100. I think 60 will be the new 100. So we should forget about $100 per barrel or anything like that. I think the range between now and 2018 will be around $45 to $60 per barrel.
If this happens, what will be the implications for national coffers?
Well, it's a very bad situation for Nigeria because we're still largely dependent on oil for our foreign exchange earnings and our government revenue. If you look at our medium-term exchange framework 2016 to 2018, is still largely based on oil prices. So until we can diversify our export base and our revenue streams, we're still going to keep on struggling. We're looking at agriculture, but we have to know that most perennial crops have long gestation periods. So it will take time before these crops are produced and ready for it. Take 2 to 3 years. So we have to look at other sources, minerals. I mean, we have large mineral deposits in the north. We have to develop those minerals and exporting those minerals so that we'll be less dependent on oil prices.
Now, just before I let you go, OPEC is expected to meet sometime in September. What are the expectations from that meeting? Already, Venezuela says it's been trying to talk to other OPEC members to see how they can come up with measures to prop up prices.
Yeah, there's usually a lot of talk when oil prices are low, but at the end of the day, nothing happens. If we look at what happened in April in Doha, there was a lot of anticipation and optimism that they were going to freeze outputs, but in the end, nothing happened because between Saudi Arabia and Iran. So unless tensions are eased between those countries, I don't see anything changing this time.